Hello and welcome back to another video. Today we're going to be looking at the Bitcoin ETF and I'm going to be fully explaining it so that you can understand exactly what it is, how it works, as well as all the benefits and negatives that come with it. So let's start with an introduction. A Bitcoin ETF or exchange traded fund is a type of investment fund that tracks the value of Bitcoin and trades on traditional market exchanges. It provides a simple and regulated method for investors to trade the price of Bitcoin on conventional financial markets. This allows individuals and institutions to gain exposure to Bitcoin without the complexities and risks associated with purchasing and holding the cryptocurrency directly. Bitcoin ETFs can either be cash settled or physically settled. In a cash settled ETF, investors will receive fiat currency upon exiting, while in a physically settled ETF, investors will receive actual Bitcoin. So how does it work? BlackRock's Bitcoin ETF aims to directly track the price of actual Bitcoins. Here's exactly how it works. To start with, they track Bitcoin's price. The ETF intends to use the CME CF Bitcoin reference rate, which gathers information from reliable cryptocurrency exchanges around the world. This allows the ETF to reflect the current market price of Bitcoin. Next, there's custodian services. The ETF plans to use custodian services offered by cryptocurrency exchange Coinbase. This means that Coinbase will be responsible for securely storing the Bitcoin assets that the ETF tracks. Next, there's trading on traditional exchanges. Like other ETFs, the iShares Bitcoin Trust will be traded on international market exchanges. This provides investors with a regulated and accessible method to gain exposure to Bitcoin. And finally, there's a surveillance sharing agreement. BlackRock has proposed a surveillance sharing agreement to help control fraud and manipulation by keeping track of trading, clearing activity, and customer identity. However, the SEC reportedly does not think that BlackRock's proposal for this agreement is sufficiently detailed. So what would be the benefits? The approval of a Bitcoin ETF such as the one proposed by BlackRock could potentially benefit Bitcoin in several ways. To start with, there's increased accessibility. ETFs trade on traditional stock exchanges, making them accessible to a wide range of investors who may not be comfortable buying Bitcoin directly. There's also greater liquidity. The introduction of a Bitcoin ETF could increase the liquidity of Bitcoin, as more investors would be able to buy and sell the cryptocurrency through the ETF. Also, regulatory approval. Approval of a Bitcoin ETF by a regulatory body like the SEC could lend additional legitimacy to Bitcoin, potentially attracting more institutional investors. Also, price stability. With more investors able to trade Bitcoin through the ETF, the increased liquidity could potentially lead to more price stability. Finally, mainstream adoption. A Bitcoin ETF could pave the way for more mainstream adoption of Bitcoin and other cryptocurrencies, as it would represent a significant step towards integrating cryptocurrencies into the traditional financial market. So now on to some of the negatives. To start with, there could be fees. Many Bitcoin ETFs have high management fees that can impact an investor's overall returns over time, and these fees can eat into your potential returns. And also, regulatory uncertainties. Price volatility and regulatory uncertainties in the cryptocurrency market can impact the value of the ETF. So this has been my video fully explaining what the Bitcoin ETF is, how it works, as well as all the pros and cons that come with it. Hopefully now that you've watched this video, you understand everything you need to know about it, so I hope you enjoyed and thanks for watching.